Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And with this little video, I'd like to update you on a couple of USDA reports that were released at the end of March. Now, each year at the end of March, what USDA does is they release the grain stocks report and the prospective plantings report. And it gives us a snapshot on both what's happening with the old crop, the crops that we've got in the bin right now, but also how we're preparing for new crops and looking at planting coming up this spring. With these reports, USDA gives us the latest information they have as to how the crop markets are shaping up. Not only as we look at finishing out the marketing year for that old crop, but setting up what we're likely to see as we look forward to this year's growing season. So, as we're looking out there right now, what USDA found when they we're looking at least the old crop was that we continue to see the stocks be a little tighter than I think the trade had expected. As you look here at the corn market, for example, they found around 7.4 billion bushels still left in storage. As you can see, compared to the last few years, that's smaller than we've seen since basically the 2013 crop. But when you think about the size of the crop we had this past year, it was much smaller than the ones we've had over the past decade. And so that has led to this, if you will, shrinking within the stocks as we look out there. It's not that usage has been that strong, but it's that, if you will, the combination of the smaller crop that we harvested last fall in combination with the usage that we've had up to this point has led to those tightening stocks. And that did put a charge into old crop pricing as we looked out there. Not only for corn, we saw the same thing as we looked at soybeans. As you're looking here now, the stock levels here at the end of March were much smaller than we saw last year at this time, but stronger than we saw 2 years ago as we look here. So we have seen, again, a slowdown in usage over time. But again, the smaller crops from last fall having an impact in terms of the tighter stocks we're seeing out there. And that gave, like I say, the markets some reason for some strengthening, especially as we look at old crop pricing. We did see the May and July contracts really strengthen up based on these tighter stocks as we look out there. And looking forward, as you can see here, what we would expect to see is continued tightening as we look out there. In fact, let me take you back here as we're looking at corn. The next stage, we'll do this again in June, get a snapshot there. And if you look back historically, we'll be looking for corn disappearance to be in the 3 to 3.5 billion bushel range, taking us down to around 4 to 4.5 billion bushels in storage by the time we get to June, and then looking to finish out by the time we get to September, somewhere between 1.5 to 2 billion bushels left in stocks. As you look at soybeans, though, I think, and this is the case where soybeans, we are concerned about how tight these stocks could get, especially as we look towards the fall. You look back over the past few years within the June timeframe, we can see these stock levels drop below a billion bushels of soybeans. And by the time we get to September, the idea is the last couple of years we've seen about 250 million bushels left in storage. But if you go back historically, we've gotten as tight as 92 million bushels left there. And that is one of the things that the trade is looking for here is how quickly do we start to deplete the stocks that are still available here in March. So we did see prices react strongly positive to the grain stocks report. On the other hand, when we were looking at new crop pricing, we did see, if you will, a much more muted response, mainly because we did see more area coming into corn production. In fact, more than the trade was expecting and more than what USDA had initially estimated when they announced their first estimates at the Ag Outlook Forum. Originally, they had targeted 91 million acres for corn. We're looking at 92 million acres is what fell out of the survey from the prospective plantings report. Now, the states that you see shaded here with some sort of color of blue here are increasing corn acreage as we look at 2023. Those states in red are decreasing. So you can see the vast majority of the Corn Belt is looking to expand corn area, with the exceptions of Wisconsin and Nebraska as we look out there. Now, the biggest growth we're seeing in a percent basis is up there in North Dakota as you're looking at them looking to expand by about 27%. That's due to the fact that in 2022, They had some significant prevented planting there, and they're looking to bring that land back in production. Now, like I say, this was stronger than what traders were expecting. Yet we saw, I would call it a muted response. And I would say that that is because as we look at the areas that are hoping to expand, we do see some weather difficulties possibly looking down the line as we look here. As we look at the Dakotas, Minnesota into Wisconsin, the large snowpack up there is going to prevent the early planting window from opening up across the northern corn belt. Also, as we look towards Indiana and Ohio, we have seen some more wetter conditions move into the eastern corn belt, and that could lead to some planting problems there. So I think the trade sort of, like I say, it reacted more cautiously to these numbers, expecting that we may see some planting problems as we move forward this spring. Now, when it came to the soybean side of the equation, USDA had projected 87.5 million acres. The trade was expecting something a little bit stronger than that. But USDA, through the survey on prospective plantings, found that 87.5 million acres here going to be planted to soybeans. And as you look here again, we're seeing that effort for expansion, especially as we look across the northern plains and into the lake states. We are seeing some expansion in the southeast as well. But where we saw the biggest pullback is along the southern plains, moving towards the Mississippi Delta region. In fact, I'd say the state number that surprised me the most here was Arkansas, as we did see them pull back by 4%. That was a state that I was looking to see, if you will, in the blue category here. But farmers there decided instead to pull back a little bit in terms of their soybean plantings. Overall, though, USDA is basically saying compared to last year, we're going to plant about the same amount of soybeans, and the market reacted by basically just sort of treading water based upon this report. And so, like I say, we've got these two big snapshots in now. When you plug those in to the other numbers that we had projected for the 2023 crop, what we're looking at here is that on the corn side, like I say, corn stocks remain very tight. So as we look to finish out 2022, we're looking at those ending stocks being projected right now to finish out at 1.34 billion bushels. So a fairly tight corn market. On the other hand, as we look at 2023, the expansion in area, along with the possibility of near record yields as we look across the country, has led to the projection of a record corn crop for 2023, over 15 billion bushels. Given that expansion in supply, plus let's call it growth on the usage side, but not quite as robust as what we're seeing on the supply side, we're looking at ending stocks building possibly over 2 billion bushels by the time we finish out the 2023 crop. And that will put downward pressure on prices as we look at that season average price for 2023. The USDA had originally estimated a $5.60 a bushel season average price for 2023. With this increased area, we'll likely see that be pushed down as we look forward in when USDA updates these numbers in May of this year. Now, as we're looking at the soybean side, again, the idea is that that acreage didn't move, so we didn't see USDA's production number shift because of the prospective plantings report. But we are watching those tight ending stocks as we finish out 2022. As you can see here, estimated at 210 million bushels by the time we finish the year. But as with corn, the expectation is building ending stocks, but not nearly as much here on the soybean side. In fact, as you look there, the idea is that we do see supply increasing, and it could be a record crop here on the soybean side as well. But we have a stronger demand picture as we look out there with domestic crush expected to rise, along with a little bit of a bump up in exports there, leading to 2023 ending stocks coming in at around 275 million bushels. But in order to get that stronger usage, USDA did bring down that season average price for 2023 down to $12.90 a bushel. So we are seeing prices being modified downward to try to bring in more usage as we look at bigger crops coming in here for 2023. And that's, if you will, sort of what the markets did as we looked at the reaction to these reports. We saw old crop pricing strengthen up and new crop pricing hold down more as we look out there. So we look at how corn futures finished on Friday right after the reports were released. You can see here that we're still looking at $6 corn futures out through harvest of 2023, but then prices falling in that 560 to 570 range as we look out there for new crop. So we look at soybeans, again, old crop strengthened up again. So we're floating above $14 and up to $15 as we look at the nearby contracts. But as we look at that possibility of a record soybean crop coming this next fall, we do see those prices moderating back down towards $13 per bushel on the futures market. So all in all, these reports, like I say, were positive, very bullish as we look at old crop pricing, and actually turned out to be sort of neutral, if we want to think of it that way, for new crop pricing. And so we are maintaining some fairly strong profit margins as we finish up old crop pricing here for the 2022 crop. And as we look at new crop pricing, this gave, if you will, the markets a little bit of chance to catch their breath. We had been seeing those new crop futures working their way down over the past month. They've been able to bounce back up here a little bit right before the report and hang on to those gains that we've seen most recently here and maintain a profit margin as we look out here being projected for the 2023 crop. Now the storyline will definitely turn towards weather conditions here across the Midwest and that planting progress as we begin to move forward. And like I say, that is an area that I know the trade is, watching quite closely here because of the way they reacted to especially the prospective plantings report here. I think as we're looking forward here, they're expecting to see some planting problems here, and that could lead to some additional price strengthening here as we look at new crop pricing over the course of April and into May. So with that, we'll stop. Thank you for your time and patience in sharing a little time with me as we covered these reports at the end of March. USDA will give us an update on planting progress here as we move through May with their crop progress reports that they will release on a weekly basis. And then we'll get a new snapshot on demand as we look at the WASDE report coming out in the middle of April. And then the first new crop WASDE report will be in May. And so that's when we'll get our first, if you will, demand update as we look forward to the crop we're about to plant. With that, again, thank you for your time. My name is Chad Hart, Extension Economist with Iowa State University.